Hey, what's up, everybody? This is Lex Trader. It is Saturday, December 2nd, 2017. In today's video, I'm going to talk about S-3 filings and how to play them with penny stocks. So first thing, what's an S-3 filing? So an S-3 filing is a filing a company issues the SEC saying that they're going to be putting out more shares of their company into the open market. And 99.9% of the time, it's a red flag. So basically, what they're doing is you're taking their authorized shares and they're taking however many they want, and they're going to be basically diluting the market by issuing more shares because they usually need money. So this happens all the time in penny stocks because they're shit companies and they don't have any money or they're losing money, and in order to stay active, they need to raise capital, and they do so through S3 filings. They issue more shares and they dump it out in the open market, and they sell them because it's their shares. They got them for nothing when they created the company for their IPO. They had a certain amount of shares authorized to use, which they can put into the open market from time to time, as long as they file it with the SEC and it gets approved. So once they do that, they just sell their shares to the open market and they raise capital at the expense of the shareholders. So it's a red flag. So when you see stuff like that, you usually think, well, hey, I should probably short this because they're going to dilute the market, making the current value of the shares less. But you can also play long in these stocks, and that's usually what I do. Uh, I don't do, I would only do it like on the first day of like a huge pump, or if there's a catalyst, which is usually a pump. And, all of a sudden people on chat rooms start saying, oh, there's an SC3 filing. They're going to do an offering, a secondary offering, and dilute the shit out of the market. And that they're usually right. But you can play this to your advantage because, when they do have some sort of catalyst, and people start doing their homework and searching through the SEC filings, they'll be like, oh, here's the S3. They're going to do an offering today, which is usually not the case. And the reason being, they're not going to do an S3 the first day of a pump because they're going to want the stock to go a lot higher in order to capitalize the most amount of money from selling their shares. So you got to think of it as like a psychological thing. So if shorts are going to get all over it and start shorting the shit out of the stock on the first day of the pump, there's a high chance it could squeeze more because they're not going to do an offering the first day of a huge gain. Usually they'll do it like a couple days later, after it goes up, say like 500%. I know it sounds crazy, but it happens all the time in penny stock land. So, I've played this so many times. I had a video a few weeks ago on Mosey where the same thing happened. There was an S3 filing out, but they had a huge catalyst. I forget why, but I played the price action of it spiking, and everybody's like, "Oh, they're gonna do an offering. They're gonna do an offering." That day of the pump, and they got squeezed, and a lot of shorts lost a lot of their money because they got squeezed out of it because people kept on buying it because it was only up maybe 30%. So I'm gonna use an example here today. This is OHRP. This was Friday's play. It was actually a pretty good play. It spiked about 50%. Basically, um, off of news of it's a biotech. Um, a penny stock biotech. It basically off of the news of a price upgrade, PT target, announced by Roth Capital for $7 a share. And then I think they also get some coverage from who else actually said it? It wasn't oh yeah, here it is, Benzinga's top upgrades right here. So yeah, so they get some shouts from a couple different places. Roth Capital was the big one. They raised their PT and started coverage on it for $7 a share. Okay, so that was the catalyst, um, and it started spiking. It's just like volume started coming in. Now, is this the first day? Is this a pump? Maybe. Is it maybe valid information? Maybe. I really don't care. All I'm trying to do is exploit the price action. So when this broke out, out of the 30-minute opening range, it started going onto my scanners. I have a scanner of the 20% gainers, so that caught my attention. I did some D&D on it. It's not a huge float. It's pretty small float. If we go to Yahoo Finance, we see the float's 51 million. Here's their outstanding shares, 56. They have total cash 18 million. Their debt's about 158,000, so it's not too much. And their book value is about 50 cents, meaning all their assets, their real estate, machinery, whatnot. That's how much their book value is on paper. So they have debt, but it's not crazy. They have more cash than debt. So do they need to do a secondary offering right now? Probably not. But they could. And they do have an S-3 out. So this is the kicker. This is where you have to do your homework. So I like, for SEC filings, I like Fintel.io. They have great filings. Also, otcmarkets.com. You can go there and you'll see filings on disclosure, and you'll see their SEC filings. You can see it here, right here, September 15th. And actually, let's see what this is. Yeah, notice of effectiveness. I actually like Fintel better. I feel like they're more up to date with this. So here's your S3 filings right here. And you can see if we open this up, it usually looks the same every time. You know, from time to time, this prospectus will allow us to issue shares offering up to $250 million under any combination of securities, blah, 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 blah. Don't really care. All I want to know is if they have this out. This was from September on the common stock, NASDAQ. Our stock was listed at 70 cents per share, 70 cents per share. So that's what they're basing this off of, 70 cents per share up to $250 million. You do the math, that's how many shares they want to dilute from the market. Okay, red flag. They need to raise some money. That was from back in September. So the psychology of this is, you know, they're trying to raise money. They're going to dilute the market by raising capital. So on Friday, if you go to all the chat rooms, you know, people were buying this because the PT upgrade, and I got in at 108. I just did a small position. I'm using Thinkorswim. This is my small account. I have a account with Interactive Brokers. I have a lot more money in there, but I'm just using this, you know, more for educational purposes. So I just did like, you know, a small investment of like $1,000. I get 750 shares, 108. I'm up $150 so far. It's like, I don't know, 13%, something like that. Not too bad. I'm holding over the weekend just because I like the breakout. You got a bullish flag breakout right here. Started consolidating after hours. It held up. So my goal is to sell into the morning spike on Monday. Just get out. All of a sudden, once this spiked up to 139 and it broke resistance of the previous multi-day high from last week of 104, I think in pre-market it was higher. Let's check that out. Pre-market it was 117. So when it broke that, I was like, sweet, this is definitely going higher. All of a sudden, shorts start coming in, and they're like, this is shit. They got an offering coming soon, blah, 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 blah. My reasoning for why they're not, a lot of people were saying they're going to do an offering that day, which is ridiculous. They're not going to do an offering when it's only up 50%. Now, I know 50% sounds like a lot, but in penny stock land, it's not. These things go up to 300%. So when I saw that, oh, something's going on here. Let's close this out. Stupid ads. Now, when I saw the shorts getting all on this, I'm like, you know what? They're not going to do an offering right now. They're going to let this go to higher than $2 because they would benefit more from them offering it higher. You know, let this get to maybe like above $2, maybe even $2.25, and then do the offering. So when shorts get on this, I feel like they're getting in way too early. First of all, it's a green day. Never short on a green day. Second of all, it's a Friday. You don't want to short on a Friday holding over the weekend because you always have the potential for more news over the weekend in favor of the price target, which will jack the price up Monday morning. So I don't know why people would be shorting in the first place. But so my thesis still stands that because of the shorts getting all over this, I think it's going to spike more. I think it's going to squeeze and shorts are going to get burned because the S-3 filing is probably not going to go in effect till sometime later next week. Let this price go up to maybe $2 or $3, up 200%, and then sell the shares at like $3. Why would you sell them at $1.30 when it's probably going to spike more and there's going to be more shorts? And that being said, they are a penny stock. Like this could be a pump they could have the price target pump, and all of a sudden they release an offering on Monday morning at 7:30, which would screw all the longs. If that's the case, you just cut losses and you get out. You sell. You can always get back in. I'm already up 150 bucks, so I have a little wiggle room. If it does, they do announce an offering Monday morning, it starts to drop, I'll just get out. No big deal. But I don't think it will. I think Monday it's going to spike up and squeeze shorts. You could have a multi-day runner here. It's also a bottom bouncer. If you look here on the daily chart, the RSI is crossing over 80, and the slow K crossed over the slow D. It's definitely bullish. Intraday chart, you have higher highs, higher lows. You get a strong bullish flag breakout. So Monday morning, I'm going to be looking to sell this into strength, and I'll definitely get out before an offering. And I still don't think they're going to do an offering. I think they don't need to. They have more cash than debt, and they got this PT raise, and they also have a phase 3 trial coming out in a few weeks. So I feel like a lot of people are going to have a lot of buying pressure up until the phase 3 results. And I don't think they would do a secondary offering before the actual results of the phase 3. It just doesn't make any sense. So my thesis stands. I think shorts are going to get squeezed Monday. Could be wrong. It's not an exact science. But I've played these S3 filings many times. I have videos on them. I like when I see S3 filings and price action going up because I know shorts are going to try to short it and they're going to get squeezed. It happens like all the time. Remember, these are penny stocks. You don't want to hold them long, 2-3 days max. I usually only hold them 24 hours, but this was a weekend hold, spiked into the afternoon. It should pop up on Monday. And I will have a video Monday to see how this trade actually ended up. But I think this is going to go up some more. Could be wrong. You never know. Anyway, if you have any questions, please leave some comments. I'll reply. Make sure you subscribe to my YouTube channel, and I'll see you on Monday. Have a great one.